Hey, this is Rochelle and welcome to Multiple Passive Streams of Income. This is video 6 of this video series and I wanted to discuss how I am utilizing specially designed whole life insurance in my trust. Before I get into the nitty-gritty of my specific trust plan, please do not delay learning about trusts. If you own any type of real estate, you must set up a trust. If you have any other wealth and want to make sure that wealth is distributed with specific instructions, you must have a trust. So many people think a will is enough and it's not. Even with a will, real estate has to go through probate. You are doing a disservice to the person or people your will identifies as the beneficiaries. When the sale of real estate needs to occur, the sale will be delayed by probate even when a will is clear-cut. Courts must confirm that the will is legally valid. Were you in your right mind when you created the will? Is the will fraudulent or not? Are there any other versions of the will out there? Are there any debts to be settled? Establishing a trust allows you to bypass the probate process, which can take years to come to a conclusion, legally. The trust owns your property, but you control the trust. You set up the instructions to be followed, and you can change those instructions in a revocable living trust. I've had 2 bad family experiences because a trust was not established. The first was with my mom. She owned the house we lived in, and when we had to make the difficult decision to have her stay at a nursing home due to dementia and me having to leave her alone at home while at work, Medicaid wanted the house to be sold to pay for her care. Fortunately, I found out because I was the caregiving child and I never lived away from my home. There was a Medicaid exemption that allowed us not to sell the home for her care. They did take her income, but they could not force a sale of the home. The second bad experience happened recently. My cousin owned a co-op, and she was pretty much wheelchair bound. She didn't want to be confined to a nursing home, so she struggled to pay for home care every day and to live in the co-op she owned. She was in the process of establishing a trust, but passed away before it was finalized. Even though there is a clear-cut beneficiary, which she had a deceased son who had 1 daughter, so her heir is her granddaughter. That's pretty clear-cut. No siblings, 1 son and 1 granddaughter. But now the co-op is in probate, and co-ops in themselves are lengthy processes because a co-op board has to approve every aspect of the co-op. The sale, the repairs, leasing to a tenant, everything must be approved by the board. So this situation will be delayed by probate and then delayed again by the co-op board. So I've had 2 personal experiences, and I learned I needed to get a trust done. One of the things you will struggle with is making decisions on who should get what and how or when your assets will be distributed. The good thing is you can create all the rules, especially if you have problematic relatives you love. You will also name an executor or executors in your trust who will facilitate your rules and wishes. My dilemma is that I just don't want to give my relatives money to spend frivolously. I wanted to create a system of opportunity for relatives and future generations in my family. I learned the Rockefellers story, but they are rich. So I had to figure out how can a working class person do what the Rockefellers do. I know the Rockefellers protect their wealth with specially designed whole life insurance. So here's how. When I pass away, my house will be sold and the proceeds of that sale will fund the trust. My grandnieces and nephews will have an opportunity to get access to a portion of the proceeds from the sale of the house. They can only get their portion for certain reasons, such as a down payment on real estate, opening or expanding a business, or to pay for education. If they do not utilize the opportunity, they can get their portion at the age of 65 for retirement. Specially designed, whole life insurance policies will ensure everyone who is eligible to receive money from the trust, which is detailed in the trust's instructions. Policies will be established earlier for future generations because the money will be in the trust to allow for that. The trust will be the beneficiary of all of these policies. So when an insured relative passes away, the death benefits of the whole life insurance policies will replenish the trust. As time evolves, the death benefits will increase the amount of money in the trust, which will allow future generations to utilize larger amounts of money. If family members are good stewards of money and decide to pay their portions back, they will be able to reuse their funds to capitalize on many opportunities in their lifetimes. If any relatives are not good stewards of money, they will have one opportunity, and when they pass away, their death benefit will replenish the trust to allow for a future family member to have their chance. Since the trust will purchase specially designed whole life insurance policies consisting of a dump-in and premium offset, the trust will pay the insurance premiums until the policy's cash value and dividends mature, where the insurance policies can pay for themselves. So that's how my trust's instructions are formulated. I came across a trust lawyer I really liked after I already had my trust done. I will leave his information in the description below, which will be in the form of a bit.ly link for tracking purposes. I liked his knowledge and demeanor, and he knows about specially designed whole life insurance. Also, his price was a lot less than what I paid to get my trust created, so I highly recommend him, but definitely do your own due diligence. When planning my trust, it took a while to get my planning straight. All families have different dynamics once you start to think about leaving behind your assets. There's so many variables to consider. Are these people responsible with money? Do any have substance abuse problems? Should the money be given when they reach a certain age? Do they have debt problems? Do they have health issues? Will divorce possibly allow your money to go to the spouse of the person you left money for? Do you want to give to charities? Do you want to give a lump sum or stagger the distributions? There's so much to consider. So really think about each person and what you want to accomplish with your trust. After my trust was completed, the funding of the trust needed to be finalized. So that was an additional $725 to pay another attorney to do the paperwork for New York City where I live. Same thing, I will add the attorney's information that facilitated that paperwork for me in New York City. Again, another bit.ly link for tracking purposes. Although people said I could have done the paperwork myself, there's no way I could have, and I was happy to pay an attorney to do it. In a nutshell, the attorney filed the deed of my house in the name of the trust at the applicable courthouse. Here's a list of the documents needed in New York City, just in case a New York City person is viewing this video. There is the affidavit of compliance with smoke detector requirement, the customer registration for water and sewer billing, the affidavit in lieu of registration statement, a NYCRPT real property transfer tax return, ARP 5217 NYC, real property transfer report, and a TP 584 NYC combined document. There's no way I could have done this paperwork. This video is probably information overload at this point, but I hope you understand the importance of a trust. Avoid probate first of all, but another important reason is that as we grow older, if you are not poor and eligible for Medicaid, your assets will be attacked if you need care later in life, whether it's for rehab, home care, nursing home care, and more. By placing your assets in a trust, you can start the 5-year look back clock that will remove your assets from Medicaid scrutiny. Always consult an estate planning attorney for professional help, but at the very least, understand the need for a trust and realize the investment to get one will be well worth it, and most importantly, get the trust done. Please share, comment, and subscribe to be alerted when I drop the next video. As always, thanks for your time, as I know you could be any other place right now. Take care.